Alright guys, this is the presentation that we're going to give to buyers when they come down and they want to learn how to buy a house. Now remember, this presentation is what helps set you apart in this industry. Nobody else goes through this with clients, and nobody takes the time to educate them on how to buy a house. So it's imperative that you really feel comfortable with this information. And remember too, we're just sitting down and trying to understand exactly what the buyer wants to do and helping them build a plan. So after we get the information from them over the phone, and now we've scheduled a time to meet with them here at the office, we're going to meet with them here at the office, and of course, when we sit down in the conference room, we're going to sit down, build a little bit of rapport, kind of take some time, get to know them a little bit better, and then what I typically do is I'm going to go over the credit report with them. Once I go over the credit report with them, I'm now ready to jump into my presentation. So after I answer any questions they have about the credit report, we jump into the buyer presentation. Basically, when I'm going over the buyer presentation with somebody, what I really want them to know is, here's what we're going to plan on doing for today. So today's goal is when we come down here and meet, we're going to go over your expectations versus reality. So the goal for today is to educate and answer all of your questions first and foremost. Buying a home can be an intimidating process at times. There's a lot of different moving parts. Maybe you haven't done it for a while, or this could be the first time you're doing it at all. And it's my goal to make sure that you have a plan. So understand that I want to go over the process of buying a home from start to finish with you, and at the same time answer any questions you have about anything you might have heard or about anything that might have happened with someone you've known in the past. So we're going to really take some time and break this all apart. We're also going to go over what we call it fairway or good faith actual, which is somewhat comparative to a good faith estimate other lenders might give, but we're going to go over the specific differences between how our good faith actual is different or better than a good faith estimate from a different lender. And also, I asked you to bring in a number of pieces of information regarding W-2s, pay stubs, tax returns. These are documents that I'm going to need to review to make sure that they match up with the information you gave me over the phone, because this is what I'm going to send down to underwriting to get your loan fully approved. The reason why I ask you for this stuff at the beginning of the process is so we can get the loan 100% approved while you're in the process of, looking for a home at the very, very beginning. And, and again, too, the biggest goal for this meeting is to establish a plan for you. What's the next steps? What's kind of a timeline you're looking for? What are you comfortable with? So the biggest thing I want you to walk away from this meeting with is, the understanding that this is a possibility, and also that, you have a plan in place and you're comfortable with it. Now, before we jump into all that information, I'd also like to discuss with you the Fairway Flawless Performance Guarantee. Now, the Fairway Flawless Performance Guarantee is really one of the things that sets us apart in this industry. No other lender, no other bank that I'm aware of is willing to guarantee their work. And it seems to me that, buying a house is a really, really big deal, and you want to make sure, you have just the amount of down payment money saved up right, you're comfortable with that monthly payment. So what we do is we guarantee what we're going to do for you. We have our Flawless Performance Guarantee, and basically we guarantee 4 different parts of the process of buying a home. The first guarantee is that your final closing costs will not exceed the amount I tell you they're going to be at the time we lock in your interest rate. Now, you'll be able to lock in an interest rate at the time you get a property under contract, but the reason why this is such a really, really big deal in our industry is because even though the government's come in and they've revamped our industry over the course of the last 24 months or so, a lender or a bank's closing cost can still increase by up to 10% from what the lender told you they were originally by the time you get to closing without them having to tell you. Now again, that's a really, really big deal. Picture yourself sitting down at the closing table, and all of a sudden you've got to come up with 10% more money for closing costs, and you're running around with your hair on fire trying to find more money, trying to find a cashier's check. It can inject a lot of stress into the situation. So this is a big deal. We're going to guarantee exactly what you need to bring to closing with those closing costs at the time that you lock in that interest rate. The second thing we're going to guarantee is we're going to guarantee that the final loan figures and documents are going to be available at the settlement company at least 3 days prior to closing. Now again, this takes a lot of stress out of the situation. A lot of lenders today are getting documents and figures and money over to the closing company maybe the day of closing. Well, I want to help you buy a house the right way, and I want to have you at least have 3 days to sit down and review all of this information before you get to closing. What will happen is at least 3 days before closing, you and I are going to get on the phone again. We're going to go over this information to make sure all of the expectations I'm setting with you at the beginning of the process have been met at the end. third thing we're going to guarantee is your appraisal and loan condition deadlines will be met per the original sales contract. Now, again, this is a really, really big deal because these are the two different milestones or time frames in that purchase contract where I'm 100% responsible for your earnest money. And we'll get into a little bit further down the line about exactly what earnest money is, but we just need to understand there's dates and deadlines on that purchase contract that we need to meet. I need to make sure the appraisal is ordered and received on time, and I need to make sure your loan is 100% approved by the loan conditions deadline. And again, when we talk about the process of buying a home, we'll elaborate on that a little bit further, but just understand that I'm going to protect you in these two instances to make sure your earnest money is not at risk. And lastly, the last thing we're going to guarantee is that your loan is going to close on the date you originally specified on the contract. If you give me a purchase contract and I tell you I can meet a closing date, we're going to meet that closing date. Now, this is a really, really big deal again because maybe a lease is expiring, or you have family coming in from out of town to help you move, or you don't have a place to stay the next day possibly, and you got the moving trucks lined up. The last thing I'm going to do is call you and say, hey, we got to push your closing back a couple days. We will not do that to you. If I tell you you're closing on this specific day, you tell me, we're going to close. Does that make sense? All right. Now, before we jump into the process of buying a home from start to finish, I kind of like to just say, I understand where you're at. I understand how you feel. Buying a house can feel like you're, have you ever been to a really, really big city where you're completely unfamiliar with anything you're around, but you want to go somewhere that maybe a restaurant or a sports stadium or something, so you got to hop in a cab. The cab is driving around crazy. You have no idea where you're at. He's ducking in and out of different turns and alleys. And you're just kind of sitting in the back seat with your eyes closed, hoping you get there. Well, a lot of people kind of relate that same experience to buying a house. They don't feel very well informed. They kind of understand where they want to go, but they're not sure exactly how to get there. Just understand that, that's where we're here to kind of separate ourselves and help you develop a plan, make sure you're educated, make sure, most importantly, you're comfortable with all the decisions that you're making. Again, buying a house is a really, really big deal, so at any point in this process, if you need me to go over some information with you so you understand it a little bit better, please, by all means, let me know, because the last thing I want to do is have you feel like this is an uncontrollable process where you're just kind of hoping things turn out right, because that's not the way this is going to operate. Does that make sense? Is that kind of what you're looking for? Fantastic. All right, now we're going to talk about the different steps when it comes to buying a home, and basically this is a good outline of how things are going to happen once you do find that house that you're that you want to purchase, and you do get that property under contract. So of course, the first thing you're going to do is you're going to make an offer to purchase the home. Now, we have to understand that this is a legally binding contract, and there are certain dates and deadlines on this contract that we must meet. Now, step 2 is going to be, once you get that purchase contract accepted, we're going to have to provide earnest money. Now, earnest money is going to be, it's typically 1 to 2% of the purchase price of a home, but it's a deposit of good faith to the seller that you're serious about moving forward and buying the house. So again, once they receive your earnest money, they're going to take their home off the property, off the unavailable for other people to come in and look at and make an offer on, because you're the buyer who's under contract. Now, one thing too I want to make sure you're real clear on, this earnest money deposit, when you give that check to the title company or the real estate agent, they will cash that check. So make sure that if you need to transfer money from your checking or your savings account to your checking account to cover that, that you go ahead and do that. Now, most importantly, too, in this process, and third here, is we need to work with a real estate agent who's really professional. Now, I know Rachel Realtor sent you over to me, and she's unbelievable. She's fantastic to work with. I've worked with her before in the past. You're in definitely very, very good hands. She definitely understands our local markets and different trends, and I know most importantly, she really, really wants to make sure that the clients and the people that she helps buy homes, it's the right fit for them. But additionally, what Rachel's going to help you do is she's going to be able to help you negotiate the right price for you, the right terms for the process of buying a home as far as timelines. If you need any kind of seller concessions, again, it's the biggest investment of your life, so it's important we have to make sure that we have a professional who's keeping an eye out for you. Rachel is definitely going to do a good job. Now, since you're working with Rachel, she's got the property under contract with you. The fourth thing we're going to do is, once you have that property under contract, you're going to have to get the inspection completed. Now, once we get the inspection completed, understand that the inspector is going to go out there and he's going to look at the house, and I know you're going to want to change a couple of things. You're going to want to, maybe change out the carpet and put in hardwood floors or repaint a couple rooms, there's definitely going to be some cosmetic things that anyone's going to want to do to a home that they just purchased. However, please understand, when we go through the inspection, we're looking for the big stuff. We're looking for different things that are wrong with maybe plumbing, electrical, sewer, foundation, furnace, roof, the kind of things that are going to be a really, really expensive cost to fix if you weren't aware that something could have been wrong with them before you purchased the home. Does that make sense? Okay. Now, understand too, once you get the inspection completed, this is also an opportunity for you to go back to the seller and ask the seller to repair a few things that might have come up on that inspection. The seller has the ability to decide whether or not they're willing to do that. If they do want to make the repairs that you're requesting, fantastic. We move forward. Now let's say the seller comes back and they either can't afford or they're unwilling to make some repairs that you've requested. If that's a deal breaker for you, this is our first opportunity to exit the contract and get your earnest money back. So understand, by meeting those milestones and those dates and timelines in the contract, we're protecting your earnest money. Now, when the inspection is completed and you give me a call and you let me know that you're 100% happy with the inspection, that's when I'm going to move forward and order the appraisal. We don't order the appraisal until you tell me you're happy with the inspection, because the appraisal costs money, and it doesn't make any sense spending money on an appraisal when we're not 100% happy with the inspection. Now, the appraiser is going to go out to the property, and basically he's going to assess the value of the home for the bank. Now, you agreed with the purchase price of the home with the seller, but now the bank has to come in and make sure that that's a fair market value. So this appraiser realistically is really protecting your interests. 3 things can happen when we get an appraisal back. First, the appraisal comes back as is, and it's at the value that you're looking to purchase. So if we're looking to purchase a home at $150,000, let's say the appraisal comes back in at $150,000, fantastic. We move forward. Now, what if the appraisal comes back a little bit lower than the purchase price that you agreed upon? Let's say it comes back at $148,000. Well, now we have that $2,000 discrepancy. Understand that the loan is going to be based off the appraised value or the purchase price, whichever is the lower of those two numbers. Okay, so if the appraised value comes in a little bit lower than the purchase price, the first thing we'll do is we'll go back to that seller and we'll try and renegotiate the purchase price down to the appraised value. And in the event that they're unwilling to do so, but you still feel like it's a really, really good deal and you really, really love the location, it's the right fit, and you do want to move forward, understand that we can still move forward. The loan will be based off that appraised value, which means you would have to bring that discrepancy, in this case that additional $2,000, on top of your down payment to closing. Does that make sense? Okay, fantastic. Now, in third, the last thing that can really happen is, let's say the appraisal comes back in a little bit above the purchase price. Well, now understand too that the seller cannot come back to us and renegotiate a higher purchase price based on the appraisal. So we basically say, congratulations, you've got a little bit of equity in that property based on the appraised value. Now, the 7th thing here is going to be our loan commitment deadline. Understand we're working hard right now to get you 100% approved to purchase a home. Once you get the inspection completed, we'll have the property. You'll be happy with the home. Once you have the appraisal done, we'll know the bank will be happy with the home. We now have all the information we need to get the loan 100% approved. I want you to know that our entire systems and processes are 100% geared towards meeting this deadline. This is the most important deadline on the contract, and we have to have your loan 100% approved, because in the event you choose not to move forward or you're uncomfortable, this is really our last date where we can get out of the contract and exit it with still getting your earnest money back. Once we do have all this information, we submit everything in underwriting. You're going to definitely get an update about our loan approval. The loan's been 100% approved. We'll send you an email going over the kind of next steps you can expect. And really the next step's going to be with us is going to be reviewing the final numbers. Like I said before, I'm going to call you at least 3 days before we get to closing. We're going to go on the phone together, go over the settlement statement line by line, make sure all of your questions are answered. And the reason why it's really important to me is because when we get to that last step, that 9th step there, when we go to closing, I want it to be a formality. I want it to be a celebration. I want it to be relaxing. I want you to be confident. I want you to understand what's going on in the settlement statement already. All of your questions have been answered. And again, buying a house is a really, really big deal. It's a huge moment in your life. I want to make sure it's done right, and we will by following this process. Any questions about that at all? Okay, fantastic. All right, next what we're going to do is we're going to talk about which loan programs make the most sense for you. And I'm sure if you've been, if you've purchased a home before or you're familiar with the process, you've heard of what lenders call as a good faith estimate. Well, good faith estimates are really just that. They're just kind of estimates. They're not really typically very accurate from most of the banks that I've seen them come from. There's a couple things we just have to watch out for in a good faith estimate. Like it says right here, it's an estimate, so the lender does not have to be accurate on all the details. And again, too, like we talked about earlier, it allows for that 10% underquote of third-party fees, which, to be honest with you, is a trick that most lenders use to kind of show you that the fees or the closing costs or the loan that they're structuring for you is going to be lower than maybe a competitor that you're shopping them against. Now, understand that by doing this, what most lenders can do, since they have that 10% window, is they can quote you lower fees. Then when you get to the final closing table, that's where that 10% discrepancy comes in. Just want to make sure you understand that. What we're going to do here at Fairway, we call it the good faith actual. It's the Fairway purchase breakdown. It's detailed, it's accurate, and it's precise. It goes over every single step of obtaining a mortgage. And it's also backed by our performance guarantee. So these are the numbers that we're going to be reviewing throughout the entire process of buying the home. And I want you to hold me accountable to this information because I'm guaranteeing it up front with you right now. So here, I put together a couple Fairway accurate breakdowns for us to review. So let me pull it up here. All right, can you see this fine? Fantastic. So now on the phone the other day, we were talking about an FHA loan. What I've done here is I've prepared an FHA financing structure for you. It's our Fairway accurate breakdown. And again, I just want to go through this with you to make sure all your questions are answered. And at any different time throughout this, when we're going through this, if you want to elaborate on something, or if you want to change the numbers, change the purchase prices, change the dates, change the taxes, whatever you want to do, this is why I want to meet with you here so we can do this together and have a conversation. First thing I want to talk to you about is exactly what underwriters look at to make sure that you're eligible or approvable for buying a home, because the biggest thing people want to know is, what's the most comfortable monthly payment for me, and if it's comfortable, is that what an underwriter will approve me for? So we have right here is based on all the information you gave me over the phone, we calculated your income to be $3,750 per month. Now, when we pulled that credit report, all the minimum payments reporting to your credit report for any student loans, for any credit cards, for any auto loans is $474. And on this purchase breakdown I have here, our projected monthly payment for the housing budget is going to be $979.03. So what an underwriter is going to do is they're going to take this $979.03, they're going to add it to this $474, and they're going to divide it by your monthly income. And we want this debt-to-income ratio to be below 45%. If we're below 45%, that's typically what the underwriters are looking for. Does that make sense? Any questions about that? Okay, great. Now, scrolling down here and just continue here on this side here, what we're doing right now is we're estimating a closing date, just for the argument's sake in this conversation, to be September 15th. Now, understand, if you were to close and purchase a home on September 15th, you would not have a payment on October 1st, and your first mortgage payment would be due the following month in November. So you do get that 30-day grace period, so keep that in mind if a lease is coming up that's going to be ending and you want to try and time that so you don't have a double month payment or any different circumstances that I should know about. But does that make sense? How the month you close, you will not have a payment the first of the month of the next month, and then the following month will be your first payment? Okay, fantastic. All right, one thing I also want you to kind of keep in mind when you're out there looking at homes with Rachel is what those property taxes are. Property taxes vary throughout all the different counties in the Denver metro area, so it's something we just have to be a little bit aware of because it's going to affect our overall monthly payment. Right here for a $135,000 purchase, I have our annual taxes at $1,350, which gives us the property taxes at $112.50 per month. Now let's just say, for example, we're looking maybe a little bit further south of Denver County and taxes might be a little bit higher. Let's say they're $1,750. Okay, watch if I change my taxes to $1,750, how that affects my monthly payment. The taxes go from $112.50 to $145.83. Now conversely, let's say maybe the taxes are a little bit lower. Let's say maybe somewhere in Denver County and they're around $900 a month. Now again, if I change those monthly taxes, and how's that going to affect my monthly payment? Okay, again, so now they go back down to that $75. I'm going to put them here at $1,350 again, how we had them originally. But one thing I want you to know is while you're going out and you're looking at homes with Rachel, if you find something you're interested in and you want me to help you put together a purchase breakdown for your review, just let me know how much you're planning on offering to purchase that home, what those property taxes are, and also too if it has any homeowners insurance dues, homeowners association dues. Another thing right now, it's a good idea at the beginning of this process, is to get in contact with your insurance agent. Let your insurance agent know that you're thinking about buying a house, and kind of see what they would think about the price range you're looking in. Maybe you can get a good idea right now of what kind of annual insurance quote you'll have. What I'm including right here is $900 a year. I think $900 is very, very conservative for this price range. But again, I definitely urge you to definitely contact your insurance agent. Okay, so now we're talking about an FHA loan, $135,000 purchase price. Now again, over the phone you told me you had about $6,000 or $7,000 that you were thinking you could use for a down payment. So what I have right here at this $135,000 purchase price is FHA requires a 3.5% down payment. 3.5% of $135,000 is $47.25. Is that kind of right around that range you're still comfortable with? Okay, fantastic. Now, 3.5% down payment, so $135,000, 3.5% down payment gives us $130,275 loan. Now, FHA requires mortgage insurance. Do you understand what mortgage insurance is? Okay, let me take a second to explain it here. Whenever you're purchasing a home and you're borrowing more than 80% of the value of the home, the lender is going to require that mortgage be insured. And the reason is because there's less equity or less of a down payment involved. Historically, those loans have a little bit of a higher default rate. So again, the lender is required that they be insured. Now, with mortgage insurance, what FHA is going to require is an upfront 1% mortgage insurance premium. So it's going to be 1% of our purchase price. So again, let's go through this math here. I have a $135,000 purchase price. 3.5% down payment gives me a loan amount of $132.75. Now, this 1% mortgage insurance premium is going to be $1,302.75. Now, you can either choose to roll this into the loan or pay it outside of closing. Most people choose to roll it inside of the loan, so that's how I have this structure set up right here. So we take this $132.75, add the $1,302.75, gives us our brand new base total loan amount of $131,577.75. Does that make sense? Okay. Now, based off today's FHA interest rates, at this loan amount, our monthly payment for the mortgage is going to be $666.69 per month. Now, the FHA also requires that you have monthly mortgage insurance. So again, they're going to insure these loans, and the reason why we're insuring these loans again is because they're above the 80% loan to value. So our mortgage insurance is going to be $124.85. Your property taxes are going to be included in your monthly payment, and your homeowner's insurance is going to be included in your monthly payment as well. All right, so understand that when you are this monthly housing budget that we're preparing for is not only going to pay for your mortgage, it's going to include the cost of the mortgage insurance, but it's also going to pay for your annual property taxes and your annual homeowner's insurance policy. Does that make sense? Is that kind of how you wanted things set up anyways? All right, fantastic. Okay, now let's scroll down here a little bit further. And what I also like to talk to you about is the costs and the fees that are included with any mortgage. First, at Fairway, we don't charge an origination fee. And the reason we don't charge origination fees is because banks and lenders don't really do a good job of explaining exactly the purpose of why they're there. Typically, origination fees are used to buy down interest rates and try and help you save a little bit of money on a monthly basis. However, we have to understand exactly what we're getting for the cost of what we're spending. So typically, a bank will throw on a 1% origination fee. Now, in this case, 1% of our purchase price or our loan amount is going to be $1,302.75. Now, what this $1,302.75 will do is it will decrease the interest rate a little bit. So let's say in today's market, a 1% origination fee is going to take our interest rate from 4.5 to 4.25%. Okay? Watch how that changes my payment. My monthly payment goes from $979.03. Let me do this here, $979.03 to $959.63. All right, so if I look at that, that's going to be a savings of $19.40 per month. However, let's think about this though. The $19.40 per month is going to cost me $1,300 up front to get. So let's do a break-even analysis on that. Do $1,302.75 divided by $19.40. It's going to take me 67 months to get that money back, or to have that nearly, to break even on spending that $1,300 up front, which is just a little over 5.5 years. So my question to you is, does it make more sense to have an additional $1,300 in the bank right now for you to maybe buy, some stuff to maybe a TV or a couch or some stuff for the kitchen? Or does it make more sense for you to spend this money up front in order to save $20 a month on that monthly payment? What are your thoughts about that? Okay, that's kind of what I thought too. I agree. It makes more sense to keep that money in the bank. So let's put this origination fee back down to 0. Now let's go over the rest of the closing costs. And again, the thing I like the most about our Fairway Accurate breakdown here is that it's all inclusive. It covers every aspect of the mortgage. There's no stone we leave unturned. And it's going to go over everything, so there's no surprises at the finish. Now, Fairway charges a fixed loan fee. Our fixed loan fee covers our processing, underwriting, doc prep, flood cert, and anything else the back room needs to do to get the loan approved. That costs $13.97. We also have the application fee. Now, again, the application fee is charged at the time that we take the appraisal. So the application fee is going to be $525 because it includes the fee of the appraisal and our credit report. Again, this will not be charged until you have a property under contract. We've locked in the interest rate. You've gotten through the inspection process, and you're ready to order the appraisal. Does that make sense? Okay. Also, we have title company fees estimated in here at $925. Now, our title company fees, do you understand what title insurance is? Okay, what the title insurance company is going to do is they're going to go and they're going to review all the different liens that have been on the property you're looking to purchase in the past, and they're going to make sure that they're all paid off. They're going to make sure there's no outstanding liens, so 6 months after you buy a house, a plumber can't come to your house and say, hey, I did some work for the previous owner and you owe me the money. Because if he didn't pay up and there was a lien outstanding, it could potentially be, upon your hands to pay off that lien. So what title insurance is going to do is going to make sure that the property is 100% free of any existing liens. We're also going to estimate for recording fees for about $200. In the county where you purchase a home in, you're going to have to record the deed and the note and different documents to give you your property rights. So we're going to include those fees in there as well. So Fairway, we have our guaranteed max closing cost at $3,047. And now the reason why I like these costs are fixed and they're guaranteed is because most banks are going to change their fees based on the loan amount. And they kind of say, okay, based on the lower loan amounts, we're going to charge really, really high fees. And the really, really high amounts for loans, we'll charge really, really skinny fees. Well, that's not fair to the buyer. At Fairway, no matter if you're borrowing $100,000, $900,000, we have our guaranteed fixed fees. And our guaranteed closing costs for the FHA loans, $3,047. Any questions about that? Okay. Now, another thing, too, I want you to be aware of is we have to set up different escrow accounts. We have to pay for things up front when it comes to buying a house. For example, the insurance companies typically require that we're going to pay for the homeowner's insurance policy a year in advance. So at the day of closing, they're going to pay for that $900 homeowner's insurance policy. We're also going to collect 3 months worth of real estate taxes and 3 months worth of homeowner's insurance to build up those escrow accounts because lenders want to make sure that in the event a buyer or a homeowner might be a little bit late on their payments, they still have enough money in reserves to make sure the taxes are paid for and the homeowner's insurance is paid for. Another thing too we have to collect up front is the prepaid interest. Now remember, when we were up here, we were saying if we closed in September, we wouldn't have a payment due in October, but our first payment would be due in November. Now understand though, when we close in September, the day we close, September 15th here, we would have to collect the interest from the day we close to the first day of the next month. Then you get that 30-day grace period. So again, if we close a little bit earlier in the month, this amount would be a little bit higher. If we closed a little bit later in the month, this amount would be a little bit lower. Does that make sense? Okay. So here we have our total deposits and prepaids at $1,711, giving us our total settlement charges for this transaction to be right around $47.58. So again, we have our down payment plus our closing costs plus our prepaid expenses gives us $9,483 all in. All right, now let's talk about this a little bit further before you get stressed out about that number here. We have our earnest money. Now, again, remember we talked about the buyer's going to, or the seller's going to request us to submit some earnest money to them. So let's say they ask for $1,500 in this situation right here. So we have that $1,500. Watch what happens to our bottom line here. It reduces by that amount because this is a deposit into the contract. It's a deposit that you're already being credited for because they've collected this money already. Does that make sense? Okay. Now again, we're going to collect the $500 application fee from you to pay for the appraisal, so that will be credited back to you at closing. And then also too, since I know that you're kind of sensitive to that down payment amount and you only have the specific amount available for down payment, we can also have the ability to ask for seller concessions. Now when we ask for seller concessions, we're basically asking the seller to help us pay for some of the closing costs. There's a right way and there's a wrong way to do this, and understand too that most sellers are pretty familiar with this in today's market, and they've been educated by their real estate agents that typically buyers might ask for this because honestly on about 8 out of every 10 loans that I write, people are asking for closing costs for help paying closing costs. So again, like I said, there's a right way to do this and there's a wrong way to do this. Most people ask for way more than they actually need, and in your case, we want to make sure that we're asking for the exact amount that we're going to need, so we're not leaving any money on the table. Now, in this instance right here, on a $135,000 purchase, the max we were going to ask for. The max we can ask for on an FHA loan is 6%. Now, in order to get you to the exact number where we need it, 47.25, we want to be as specific as possible. So if we ask for 3%, where does this take us? So we want to get this number, this 47.25 to 49.93 right here. So we ask for, let's say, 42.50. We're just about right there. Yep, right there, 47.33. So if we ask for $4,250 in seller concessions, the seller will be able to help us pay for our closing costs, which pretty much means you're going to only be bringing to closing that down payment of $4,733.04 or $4,725. Does that make sense how that's structured? Any questions about that? Do you want to look at any different scenarios? Do you want to play around with any different purchase prices? Okay, because this is the time to do that, where if we want to play around with any different purchase prices, or if we want to kind of estimate taxes to be a little bit different, by all means, let me know. Okay, now also what I can do here, if you'd like, is I can print some of these out for you so you can take them with you. What I suggest while you're through this process is just put this on the refrigerator or somewhere accessible, because this is basically going to be our roadmap to get you where you want. All right, print them out, go over the docs, blah, blah, blah. Okay, what I'm going to do here now is I'm going to open back up that presentation for them, and I'm going to go over and I'm going to kind of try and do a really hard close with them to want them to, really be serious about moving forward. So what we're going to do is we're going to set this up so there will be a presentation we can pull up right after we go over that good faith actual with them, where it's going to pop up to this page. And this is going to give us a chance right here to really, sell the items we just talked to them about. So again, the reasons why I want to help you buy a house is because I want to educate you. I want you to be I want you to be confident about all the decisions you're making moving forward. Again, buying a house can be stressful, but there's very many things we can do to take the stress out of it. At Fairway, we went over the guarantees. We have guaranteed on time, under budget, and no surprises closings. We're going to guarantee our closing costs. We're going to give you the actual numbers that you're going to see on that settlement statement with our good faith actual. And of course, you and I are going to have a chance to review them 3 days before closing. Now, do you have any questions about a lot of the information we just talked about? Okay, fantastic. Now, really the next step for us is I asked you to bring in a number of pieces of information for me to review. And thank you for bringing those in. Let's take some time to go over this together. But most importantly, what I want you to understand is what I'm going to do right now is we're going to get you 100% approved to buy a house. Where most banks or lenders are just going to, take a phone call with you over the phone like we did a couple days ago. They're going to pull a credit report like we did, and then they're just going to say, yeah, you know what, everything makes sense. And they're going to fire off a pre-approval or a pre-qualification lender. You know what? Pre-approved and being approved are two completely different things. With the way underwriters are reviewing files today and being very, very specific about what documentation needs to be in there, what I like to say is let's do the heavy lifting up front. Let's collect all this information at the beginning of the process. Let's put this all together so when you get that property under contract, we know that you're 100% approved. So again, thank you for bringing this information for me to take a look at with you. Our goal right here is to review all this information, have it exactly where we need it to be, have an underwriter review this, and give us the ability to issue our NOLA. Now our NOLA is going to be our Notice of Loan Approval. And what we'll do, guys, at that time is we'll have an example NOLA for you to kind of go over with them to kind of get them familiar with what it's going to look like. And really, at this time, if they're giving you good energy back and you're answering their questions, you're helping them kind of just get their mind around the process of buying a home and maybe what their options are, they're going to do whatever you'd like them to do. They're going to do whatever you tell them to do. So, when we go through these and we work together on these first couple ones, you'll get a really, really good feel of kind of different flows or different processes. But again, remember the concepts. The concepts that we're really trying to hammer away for our buyer is we're inviting them down to our office because we want to meet with them face to face. We want to establish that trust and establish that bond with them. Like we said, when they walk in, they're going to see the name on the board. You're going to greet them with a handshake. Leslie's going to offer them coffee, drink, soda, whatever we got. Get them in the conference room, get them comfortable, sit them down, slow them down, let them know you want to educate them, let them know you want to go over the entire process of buying a home. Explain to them the fairway guarantees, go over their specific breakdown with them, take some time to let them know exactly why you're getting them approved. A lot of times people are going to react much better if you explain why you're doing something instead of telling them why you're doing something. So again, I hope this was helpful, and that's all I got right now.